Guys, welcome to the Meet Damien channel. I am Damien, and in today's stock market live stream video here, we're going to be talking about Zoom, Dell, Best Buy, and Macy's, which reported earnings this week. Macy's actually did a preliminary report. They sounds like there might be some bad stuff happening on with Macy's, but we'll get into it. First, we're going to take a look at the markets here, see what's going on in stock market world here today. Um, as we as you see me start to disappear here, you'll see what's going on in the markets. All right. So we have the U.S. stock markets here. Dow Jones is up today, 0.42%, 44,910. NASDAQ is up 0.83% at 19,218. S&P 500 is at 6,032, up 0.56%. Gold is up a little bit today. It's at $2,672, up 0.3%. Oil at $68.15 a barrel, down 0.83%, and that's good for the economy. The U.S. 10-year Treasury is at 4.17, down 1.5%. So that's good for those who are looking to get loans or mortgages. And just going down here to silver here. Silver is also having a good day at $31.06, and that's up 1.67%. But let's get into the earnings. We're going to talk about Zoom and the earnings report that they had. Let's look at the earnings. We're going to look at the Zoom, and then we'll look at the chart for Zoom as well. Okay, take a look at the what they had the report for earnings, and then we'll see how that affected the stock and where it might go next. And then we'll do the same thing with Dell, Best Buy, and Macy's. I'll take maybe like one or two requests if there are any. I'm trying to keep this video short today. I have some things to do later on tonight. So yeah, we're gonna keep this video short and sweet and to the point. I'll take maybe one or two requests. We'll put it in right now if you're interested in me talking about your particular stock. But going back to Zoom here, they're saying that Zoom's third quarter earnings beats expectations. Okay. Zoom video, they reported the third quarter results. Revenue $1.18 billion, up 3.6% from Q3 2024. Net income $207 million, up 47% from the last quarter. Profit margin 18%, up from 12% from the previous quarter. The increase in margin was primarily driven by higher revenue. That's good. That's a good thing to see. Okay, that means they didn't have to cut expenses. They're getting more sales, more revenue. Okay, earnings per share was 67 cents, up from 47 cents in the previous quarter. Zoom video communication revenues and earnings, they beat expectations. Revenue exceeded analyst estimates by 1.2%. Earnings per share also surpassed analyst estimates by 9.9%. Looking ahead, revenue is forecast to grow 3.5% on average during the next 3 years, compared to a 12% growth forecast for the software industry in the U.S. So not as strong as the rest of the industry, but still growing. The company shares are up 5.8% from a week ago. Balance sheet analysis. I'm not sure if we just take a look at what they say quick here about balance sheet. Yeah, we don't even really need to know about balance sheet. We're gonna actually look at the actual stock itself on the on TradingView here. Okay, so TradingView, you can see that Zoom is trading at $82.69. That's right above my head. Okay, right there. Okay. So that's the last trade of the day for Friday, Black Friday. It was a short trading day for Black Friday here. And it's like 2:30 East Coast time right now, but I think they got done at like 1 o'clock here. Okay. That was the last trade of the day for Black Friday. And just looking here, you can see that, ever since like August, we've had like kind of like I would call this an ascending cup and handle pattern. Okay. and you can create whatever names you want for it. But to me, this is basically almost like a cup and handle. We're now going to consolidation here. Okay. So I see basically the beginnings of a bull flag here. Okay. And that's a bull flag because it's coming from an uptrend, not from a downtrend. If it was a downtrend, then we would call that a bear flag. Okay. And the way these bull flags normally go here, okay, start from the bottom of the flagpole here to the top of the flagpole, okay, that gives you the measured move. And if we were to break out of this flag, out of the $86 range here, then I could see Zoom getting up to about $105 per share sometime in the future. Don't know when that might be, but it's saying that it's possible here for Zoom. And just seeing if we can look back at previous price support and resistance levels here, you can see that the $105 level, right, was previous support and resistance back in July and May of 2022, April 2022. So it has been at that price before. So for it to get back to $105, that is possible. Okay, as long as they keep beating revenue and earnings estimates here, and beating expectations, then yeah, I could see $100 price for Zoom. Now the bearish case, real quick here, if we pull up the moving averages, okay, you'll see the white, red, blue, and green lines here. Okay, Zoom looks like it might come back down as it is already. Looks like it's coming down to the white 21 EMA, the 21 exponential moving average on the daily chart here is currently sitting at $81. So looks like it's getting close enough to that line. It might go a little bit below that, but it's going to probably stay on that white line as best as it can. And the great thing about this white line, the 21 moving average, is that it's going up. Okay, the trend is up. So I would expect the price of Zoom to also go up as well in the near future. Also, the green line, the 50-day moving average, the blue line, the 100-day moving average, and the red line, the 200-day moving average, they're all starting to trend up. So we're getting like the beginning of a bull trend here on Zoom. Looks like there might be some good price action for Zoom in the future. But if Zoom does, just continue on with the bear case, I would expect Zoom to probably come down to like the bottom of this this bull flag that is starting to create, and that's around like the $78 area, or it could bounce off the white EMA. If it decides to go further than that, then it might get some support here off the green moving average, which is at $74. But remember that thing is creeping up, so it might actually just, I would say the line in the sand is actually around like $80 for Zoom. Okay, if you're getting $80, you're getting pretty much a good deal here. You put your stop loss right below the averages, or maybe right below this sideways price action right over here in the beginning of November. Maybe you put a stop loss at like $73, but I don't see Zoom going lower, especially after they reported a good quarter and they have some good guidance as well. Okay, the trend is up for Zoom, and that's the short answer for your for you Zoom investors and traders out there. Okay, let me get a swig of water here. I've been doing a lot of talking. Okay, we're gonna move on to Dell. Okay, which is another technology-related company. Dell reporting earnings. They're saying that Dell shares have fallen on a light forecast despite AI sales, artificial intelligence. Okay, that's interesting. Okay, so Dell Technologies reported quarterly earnings that beat analyst expectations for earnings per share, but came up light on overall revenue. So that's interesting. So their revenue is not that good, but I guess they're keeping their expenses in line to actually beat on their earnings. Dell shares have risen 86% so far in 2024 as investors realize it's one of the most important companies selling tools and systems for AI developers. Dell said it is expected between $24 and $25 billion in revenue during the fourth quarter, less than the expectations of $25.57 billion. Okay. So they brought down their guidance a little bit. It seems that's reason why the stock sell off earlier this week. Dell Technologies forecasts for fourth quarter revenue and earnings were below Wall Street expectations on Tuesday. Despite bullish commentary from the company on AI sales growth, the PC market reported quarterly earnings on Tuesday, right, about 3 days ago, that beat analysts' expectations for earnings per share, but came up light on overall revenue. Shares fell 10%. Oh, that's a big drop. 10% in after-hours trading. Here's how Dell did for the fiscal quarter consensus estimate for quarter ending in November 1st. Earnings per share came out at $2.50, adjusted versus the $2.06 that they were expected. Okay, so a slight beat. Revenue came in at $24.4 billion versus $24.67 billion. So they were expecting to make more revenue, but they didn't. Net income climbed 12% to $1.12 billion, or $1.58 per share, from about $1 billion or $1.36 per share in the year ago period. Overall revenue increased 10% from $22.25 billion a year ago. Okay, so they are making more money. Just they didn't make as much as they thought they were going to make for this quarter. Dell said it expected between 24 and 25 billion in revenue for the fourth quarter, less than the expectations of $25.57 billion. It said it expected $2.50 in adjusted earnings per share versus expectations of $2.65. So that's the reason why. So earnings guidance is not as robust, as strong as the investors would like, and they punish the stock because of that. This business, according to the chief operating officer, Jeff Clark, told investors on the earnings call that growth from AI will change from quarter to quarter. The business will not be linear, especially as customers navigate an underlying silicon roadmap that is changing. The company's shares have risen 86% so far in 2024, so they are having a good year so far. As investors realize, it's one of the most important companies selling tools and systems for artificial intelligence developers. Dell is a top vendor for computer clusters required to develop artificial intelligence, especially computers based around NVIDIA chips. It competes against other server makers such as Supermicro Computer and Hewlett-Packard Enterprise. Demand for NVIDIA's AI accelerators remain high from cloud providers, enterprises, and government institutions who often buy systems installed with tens of thousands of AI chips. Dell sells the systems completed. They sell systems, okay? In March, NVIDIA CEO Jensen Huang gave Dell and its founder Michael Dell a shout out as the company contact to place orders for its new Blackwell AI chips. I mean, you could do more reading on your own time, guys. Here, I'm trying to get this video short and sweet and to the point, and try to get ideas like where the price might go next. We already have an idea that the price went down this week, but I think there might be some more good news for Dell, good price action for Dell in the future here. Let's go over to we're going to look at Dell on the on TradingView here. And you can see right now that the last trade of the day for Friday, November 29th, 2024 was $127.59 for Dell. Okay, Dell Technologies. And I mean, the trend has been upward and onward and upward ever since like August, the beginning of August. You can see just making very nice, clean, steady. And let me just get rid of the moving averages real quick here. Very nice higher low, another higher low, and this is probably gonna be another higher low here as it's making higher high, another higher high. So the trend is actually it's actually a channel. Okay, we're getting a channel here for Dell. Okay, as I draw this out for you guys. Okay, and Dell is just going to probably bounce up and down in this channel, ping-ponging back and forth. Right now, you're at the bottom of the channel, so maybe might be a good time to buy some Dell, especially since they weren't able to get the kind of earnings that they were expected to make. You could probably get Dell right now at a discount, knowing that in the future, with the AI and artificial intelligence and just the business cycle starting to increase, and also AI computers increasing in value here, that's going to cause Dell to also increase in value. Okay. The bearish case, if I pull out the moving averages here, if Dell does decide to go down in price, I mean, it already did come down to the moving averages here. The moving averages is at $119 for the 100-day moving average, which is the blue line, that light blue line. You have also the red line at $122. So $122 and $119 is going to be support. Right now, Dell is currently trading at 127. Okay, 127 happens to be where the green moving average is. Okay, that green one is the 50-day moving average, and that one is saying that it should be about $127. And that's currently where we're at right now. So Dell came down to the 50-day moving average, but I don't see any more decline in this stock unless more bad news comes out. They are making more money than they were last year, and they're expected to make more money going into next year. Okay, with the AI, cloud computing, and all that stuff. Yeah. So I would rather see the bullish case, because the bearish case is that Dell just comes down to moving averages, and also you have some price support area and resistance at $120. So I wouldn't expect Dell to go any lower than 120 here for the bearish case. But the bullish case is that we could see Dell get right back to its localized high that it made back in November 25th, where we got as high as $147. That could be where Dell might want to go next as it starts climbing up in this channel that it's creating. And yeah, that's my near-term price target for Dell. Is I'm expecting 147. Yeah, we'll just call it $150 for Dell in the near future, going into the beginning of 2025 here. Onwards to Best Buy, which is consumer electronics, kind of related to technology here, tech stock, but not really. It's more like a consumer discretionary stock. But yeah, moving on to Dell. I mean, not Dell, Best Buy. Best Buy reported earnings. They're saying that Best Buy broadly misses earnings estimates as consumers pull back on appliances and electronics. That's interesting. Okay, there's a little video here. Okay, but we're gonna go. Get out of here, video. They're saying here that even artificial intelligence couldn't make up for flagging consumer demand at Best Buy. That's interesting. Okay, for the 12th consecutive quarter, the retailer posted negative same-store sales growth. Negative for like 12 quarters. That's like what? That's 3 years in a row. Down 2.9% year over year versus estimates of a 0.92% decline. Net sales of $9.45 billion and adjusted earnings per share of $1.26 also missed expectations of $9.63 billion and $1.29 per share, respectively. Best Buy CEO Corey Barry attributed the miss to a combination of overall ongoing macro uncertainty, customers waiting for deals and sales, and distraction during the run-up to the election, particularly in non-essential categories, in an earnings call. In the quarter, appliance and entertainment sales dropped 14.7% and 18.8%, respectively, compared to estimates of declines of 7.5% and 4%. Hey, I don't know. There might be a company-specific problem. They're trying to blame it on the economy, but there might be something wrong with the company itself, not the economy. Computing and mobile phone sales gained 3.8%, while service revenue was up 6%, both slightly beating estimates. The company expects same-store sales growth for the fourth quarter to be flat to down 3%, slashing optimistic views that demand was stabilizing post-pandemic. Fourth quarter sales are a sequential improvement. Barry told reporters in a media call, "We like that we're seeing early in the holiday a little bit better than our expectations." So they're expecting sales to pick up during the holidays and whatnot. This year, the company kicked off Black Friday sales a week earlier as consumers hunt for value. Best Buy stock fell 7% in early trading as of the market close on Monday. Shares were up nearly 19% year to date, trailing behind the S&P 500's gain of 25%. Here's an earnings breakdown. Like we said, $1.26 versus they're expected to make $1.29 per share. Net sales was $9.45 billion versus what they're expected to make $9.63 billion. And we talked about the same store sales growth and all that. Here's how the sales growth was for their segments. Appliance was down 14.7%. Entertainment was down 18.8%. Consumer electronics was down 5.8%. Computing and mobile phones was down 3.8%, and services were down 6%. Internationally, they were down 3.7% versus 0.57%. So I would say maybe the international market might be more economic related. But I believe Best Buy is getting their butts kicked to them on the appliance and entertainment and the consumer electronics, mainly because of you have competitors like Walmart and Amazon just doing really good with their online sales, taken away from Best Buy over here. Okay, that's my opinion. You can take it for what it's worth. Anyways, we'll look at the chart here real quick, just to see where this thing might go. Yeah, so basically not a good quarter. They're expecting maybe holidays to be a little bit better, but we'll see what that is doing to the stock here. Okay, so if I put in Best Buy. Okay, Best Buy currently trading at $90, even, up 2% on this Black Friday. Okay. The looks like we had a low put in here. The most recent low was $83.81 on Tuesday. I think that was like right after they reported their earnings. Yeah, because they had they had a bearish abandoned baby over here. Okay. But yeah. Looks like Best Buy got some support off the 200-day moving average. 200-day moving average was at $85.39. We went a little bit below that on Tuesday when we went to $83.81. But it's been in a bearish trend, making lower lows and lower highs here ever since the beginning of October here. Okay. Best Buy is getting some support in this $86 area in the low 80s, as it was trading in that area back in like June and July and August, basically the summer of this year. Looks like the uptrend, it has been an uptrend all throughout 2024. Let me see, I'm just going to grab a trend line here. And, as long as we're able to continue making higher lows here on Best Buy, I mean, it should creep up to higher prices here. Okay. Hopefully they can report better earnings going forward, and maybe they can get back to where they were back in like November of 2021 when they were trading at $109, $110 a share. Okay. Excuse me. But yeah, I don't think there's anything to be worried about. Maybe this could be just like with Dell. You could take advantage of the slightly bad quarter that they had and just buy at low prices here at like $90, or maybe you can get it at like $80 a share. And the bullish case is that we get right back up to where we were earlier in October and September, when we were trading at like $100 a share. Okay. And then maybe even further where we were like $110 a share. That's the bullish case for Best Buy. Bearish case is that we actually break this trend line and we go down to lower prices, and then we could probably see maybe some support at $80, but then after that we're looking at support at like $70 here for Best Buy. Okay. And that's the bullish and bearish case for Best Buy. And I got one more stock for you guys. We're going to be talking about Macy's. They were supposed to report their earnings. They report some of their earnings this week, which is a little bit concerning. And I'll show you why. Going into Macy's earnings report here. Macy's, they reported the preliminary Q3 results. They postponed their earnings release. Shares of Macy's fell 2.2% during the trading session as investors digest the news of a delay in their fiscal third quarter 2024 earnings release. The delay is related to the discovery of accounting irregularities for delivery expenses. Okay. Maybe not so bad, but still, like, what the hell, right? An investigation revealed that a former employee Oh, okay, so this makes sense now. And a former employee intentionally hid about $132 million to $154 million in delivery costs between the fourth quarter of fiscal 2021 and the third quarter of fiscal 2024. During this period, the company reported approximately $4.36 billion in delivery expenses. To complete an independent investigation, Macy's postponed its earnings release and now expects to publish full results by December 11th. Okay. Details of the Q3 preliminary results. Okay. Macy's has reported a 2.4% year-over-year decline in net sales, totaling $4.74 billion. Comparable sales comps dropped 2.4% on an owned basis and a 1.3% on an owned plus license plus marketplace basis from the prior year quarter. While Macy's first 50 locations, Bloomingdale's and Bluemercury, showed sales growth, this was outweighed by underperformance in its other non-first 50 locations, the company's digital channel and cold weather categories. Macy's ongoing business comps, including both Go4 locations and digital platforms across all nameplates, decreased 2% on an owned basis and 0.9% when including owned, licensed, and marketplace channels. Net credit card revenues were $120 million, down 15.5% from a year ago period due to net credit losses. Macy's Media Network revenues climbed 13.9% to $41 million due to higher advertiser and campaign counts. Macy's brand-wise sales insights. Okay. I mean, you guys can read this on your own, but they haven't really come out with the complete earnings release yet, but they gave you an idea as like what's going on with the company so far with their sales as best as they could. And let's just see what that did to the stock on and TradingView here. Okay. So I'm going to go ahead and type in Macy's here on the New York Stock Exchange. Macy's currently trading at $16.24. That was the last trade for Black Friday. And it's been in a downtrend ever since like March of 2024, making lower highs and lower lows here. Looks like Macy's is trying to get some support at the $14 level. Okay. Currently it's trading at $16, but I see $14.50 as a nice level for traders to try to defend. Okay. I see a double bottom already in the chart here. You know, this is a slightly above, but basically this is a bottom and then another bottom. And that could be it. I mean, we might not see. What the hell? Guys, I do not know what's going on here. But I do not know what is all about. Okay. Anyways, sorry about that little interruption there. But Macy's is basically it's double bottoming over here. I could see Macy's starting to try to creep up to higher prices again. All we need to do is we need to see Macy's get above. I would like to see Macy's get above the red 200-day moving average here at $17.56, and then I would start to become more bullish on the stock here. Okay, $17.50 also seems to be like where some lows were made back in March. Okay, so that might be the next area of resistance if the stock decides to climb up to higher prices here. $17.50 or even $17.20 seems to be where the resistance is going to be for Macy's. But then if it can get past that, then, you know, I see like $18, $19 stock in the future here for Macy's. Like I said, the bearish case, so that was the bullish case. The bearish case is that we break past these double bottoms that we're making at $14, and then we might see at the bottom, we might see Macy's fall all the way back down to like $11 here, which it was like at back in August and November, basically a year ago, August and November of 2023. And if you're able to scoop it at that price, that might be the best deal that you can get on Macy's. I don't really see it going lower than that. because now you're talking about like prices that were like the price of Macy's where it was at during COVID. Okay, I don't see Macy's going that far down. Okay, at like $4 or $5 a share. I think that was a generational low. You're not going to see that again anytime soon. But never know. With the probabilities, we're all trading and investing based on probabilities here. I mean, some investors are investing on the actual earnings release and reports and doing fundamental investing. But for us technical investors, we trade on probabilities, and the probability is that Macy's is most likely going to probably trade sideways if the earnings is just okay, and they can fix that delivery costs problem that they got going on. If they have really, really bad delivery costs, then it could come back down to the $11 and $12 area. And also, we'll see what Black Friday sales is like. We just had Black Friday today. Hopefully, it's good. If not, then yeah, that can also knock the stock down to the $11, $12 area. Okay. But if things are good and the company has some good guidance going forward, then yeah, we could see a $20, $19 Macy's here in the future. Okay, guys, that's going to be it for today. I'm trying to keep it short and sweet, and yeah, 30 minutes that we were able to cover four stocks that reported their earnings this week. Macy's, we try to do its best to report as much as it could because of the employee that was purposely messing things up. But yeah, I'll do another stock market video like this for next Friday. So be on the lookout for that. I usually try to do these videos at 5 p.m., but I had some things to do today, so that's why I did an early video. And also the stock market closed early today anyway, so it kind of worked out. My next live stream, if you guys want to see another live stream from me, is going to be on Sunday around maybe 5 p.m. I'm going to be talking about cryptos, how exciting cryptos can be. And if you guys have any stocks you want me to talk about, you can talk about that during the crypto live stream. But we usually focus on cryptocurrencies for the most part because that's like the only thing that's going on in trading on a Sunday. Crypto is a 24/7 kind of marketplace versus stocks is only Monday through Friday and certain hours of the day. So anyways, yeah, if you like this video, go ahead and smash that like button, please. Show some love and appreciation. I appreciate you guys coming out and watching these videos. And if you're new and you want to see more videos like this, go ahead and smash that subscribe button, and you'll be able to see more videos like this from me, Damien, on the Meet Damien channel. I enjoy talking about stocks, and I also enjoy talking about crypto. And you came to the right channel if that's what you like talking about and investing in. Okay. Until then, I hope you guys have as much good luck with your investments in the future here. And yeah, I will keep you posted about the next stock market video. Take care, guys.